The news day continues here on One News Now. I'm Dani Laurel. President Bongbong Marcos brings home some 700 billion pesos worth of investment pledges and contributions from his recently concluded working visit in Japan. The president says these could generate up to 24,000 jobs for Filipinos. Ian Suyu with the details.
Arriving from his 5-day visit to Japan, President Marcos said the Philippines is successful in convincing Japanese leaders and business executives to consider Philippines as a potential investment site for their companies. The Philippines is looking at 700 billion pesos worth of investment pledges following Marcos's Japan trip. Marcos said the amount of pledges they garnered could create 24,000 jobs and help provide economic stability in the country. He also announced that the Japanese government has committed around $3 billion to aid the Philippines' major projects, such as the North-South Commuter Railway that will pass through Malolos, Bulacan to Tutuban, Manila, as well as the North-South Commuter Railway project extension.
Coming back, we carry with us over $13 billion in contributions and pledges to benefit our people, create approximately 24,000 jobs, and further solidify the foundations of our economic environment. As ever, our partner Japan committed to provide infrastructure development loans for two major projects, the North-South Commuter Railway for Malolos to Tuban, and the North-South Commuter Railway project extension.
Aside from these, the government floated the possibility of entering a visiting forces agreement with Japan and a possible tripartite agreement with the United States.
We have cemented our defense and security relations. We have also covered a great deal of ground in the areas of agriculture, ICT, cooperation, and with the signing of bilateral agreements that provide the framework for enhanced mutually beneficial collaboration in many areas.
As part of the final stretch of his visit, Marcos met with the Filipino community in Japan and assured them that the Philippines will be able to open more jobs for its citizens. According to the Immigration Services of Japan, there are around 267,000 Filipinos residing there since 2021.
And while I know that they are doing well there and are very well respected in their profession, I assure them that this administration is committed to creating more job opportunities in the Philippines so that working abroad will become a career choice and not the only option available to them.
For News 5, Ian Suyu, we are One News.
Now, Japan's Mitsui & Company and Pangilinan-led Metro Pacific Investments Corporation have pledged to invest $600 million, that's over 32 billion pesos, in infrastructure development in the Philippines. MPIC Chairman Manny V. Pangilinan said MPIC signed an agreement with Mitsui and several parties and management to commit to invest the amount in infrastructure. Meanwhile, Mitsui also eyes investments in priority sectors of President Marcos's administration, particularly in agriculture, infrastructure, and renewable energy. The president attended a dinner meeting with Mitsui and MPIC executives in Tokyo on February 8th during his working visit in Japan. So the Trade Department says several investment deals with Japan are, quote, ready to go. DTI Secretary Fred Pascual said some businesses are already registered with the Board of Investments, but he also noted that other agreements may materialize in the span of 3 years.
Meron mga iba ready to go. There are those that are plans over the time horizon. I have heard from those Japanese companies you talk to goes to as long as 3 years, within 3 years. Normally, that's the time frame within which big investments are made. Hindi naman buhos bigla yan.
Now, Pascual expressed optimism that the possible foreign investments would generate more jobs. Filipino and Japanese officials, as well as Japanese companies, have signed at least 35 investment deals on a wide range of areas of cooperation, that's from infrastructure to transportation and energy.
We bring these various efforts together. That could really translate into something very significant compared to the past years. We cannot afford to be pessimistic about this because our optimism will give us the enthusiasm to work hard so we can address the bottleneck.
We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Danny Laurel. Now, kicking off the Monday morning markets report with a look at offshore equities. You can see on my terminal here that Wall Street last week actually saw the worst week for stocks and bonds this year. Now, that's ahead of inflation data due on Tuesday over in the U.S. It's very crucial for the investors to understand what the Fed's next steps are going to be. Now, you can take a look at my chart here. Over in Asia Pacific, the index, the indices are moving on the back foot. You've got that opening in the red this morning. The Nikkei 225 is down by 1 3/10%. The Hang Seng over in Hong Kong down by more than 1%, and the FTSE Straits Times down by more than 0.4%. So it does seem to be the case, apart from the other indices over in China like Shanghai and Shenzhen, the rest of Asia is opening quite clearly in the red. Now let's take a look at our own index here. We are bucking that sell-off and actually up by 11.33 points. That's up by 0.2% to 6888.12. Nevertheless, it's still quite far from the above 7,000 levels that we had enjoyed. Let's take a look at which ones in our bourse are actually going against that Asian red tide. You can see one of the best performing today is Metro Pacific Investments. That's up by 2 4/10%. We had just reported here how they are going to be, developing infrastructure projects here in the Philippines together with Mitsui. Incidentally, MPIC also happens to be the best performing in the index year to date, more than 20% up already. Now, this is followed by a couple of Aboitiz stocks, Union Bank and Aboitiz Power, together with Emperador and BPI. But still, you've got several sitting out this rally. You've got AGI down by 1 8/10% this morning, followed by PLDT and DMCI. Now, I wanted to take a look at the property counter. This, as of course, all eyes are going to be not just on that print of inflation over in the US, but what the Fed will be doing and consequently what the BSP will be doing. Now, as of now, expectation is for the BSP to deliver another rate increase on the next meeting, but probably a softer one at 25 basis points. But again, it's all up in the air. And the most, rate sensitive index here is the property index. Of course, less people will be buying houses if the interest rates go up, and you can see that, however, this morning up by 0.5%. Now, there's one specific group of stocks that I wanted to check out here, and those are the solar stocks. A lot of news on that front. You've got, first of all, Citicorp Energy REIT that is listing 4.5 billion pesos in ASEAN green bonds. That's the first ever bond on the Philippine Dealing and Exchange. That was on Friday, and the demand for this green bond exceeded the 3 billion peso offer, so that allowed the issuer to actually fully use the 1.5 billion peso over subscription. Now, that would carry a coupon rate of 7.0543%, so quite hefty there, and that is due on February 2028. Now, they will be using the proceeds to acquire some properties to grow their asset portfolio, and this is happening. C-REIT right now is flattish in trade, but this happens as the parent, which is called Citicorp Renewable, is planning to IPO this year. At least that's according to our sources over at Reuters. They're looking to fund $4 billion worth of investments in solar over the next 5 years. Now, let's take a look at SP NEC, and that is, of course, Solar Philippines Nueva Ecija. That's up by 1 3/10%. This, as they're saying that the parent, which is Solar Philippines Power Project Holdings, or shortly known as SP, has agreed with Prime Infra. So this is, of course, a company owned by Tycoon Enrique Razon, with which they have joint ventures. So they have 3 joint ventures, and SP will be selling their shares in Solar Tanawan to Prime. That is for 1 billion pesos. And when that happens, Prime, that would be owned 100% by Prime Infra. Now, meanwhile, they will be using the proceeds to buy out the preferred shares of Prime in Solar Tarlac for 1.5 billion pesos, and thus they will be owning 100% of Solar Tarlac. So basically, decentralizing the joint venture here, but they will be continuing the joint venture over in Terra Solar Philippines. And finally, I just wanted to take a quick peek at Sherpass. That is a stock we haven't really been looking out for in a few days, but take a look at that. It's up by 11%. I'm just actually going to pull out the 3-day chart for you so you can see how massive that jump is. 11% just in the first 15 minutes of trade and 6% in the past 3 days of trade. This, as they've said, they will be creating an Australian unit to expand their market. They will be establishing a sales presence in Australia and offering a range of IT services, including staff augmentation, managed services, and software development. So another company to be watching out for today. Now, for more updates, visit News 5, the Philippine Star, and Business World Online, or visit our website, that's onenews.ph. For more in-depth analysis, you can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com, and stream One News live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.